Yeah, as you could see, we were happy to see the sales turning to 3% positive. That was helped by additional supply that we were able to secure. That also shows that if we get the supply, we can convert the order book and actually we can drive sales. So that's something that we need to continue to work on as the environment remains volatile. And we also know that the reliability of supply chain still needs to be strengthened. But it was a first sign of the interventions that we are taking to secure a better supply chain outcome and therefore see growth and then also on the back of that profit increase.
Roy, just unpick the supply chain issues for us at this point. What is it going to take to provide that resilience that you're seeking, and how long will it take to achieve that?
Yeah, I think we're looking at shorter and longer term measures. So in the short term, it's critical that we secure the real short components that have been holding us back in certain lines of our businesses, because we see a differentiated picture. In personal health, for example, our consumer business, we're currently unconstrained in supply. So there actually we can deliver. On the health system side, we see some shortages continue. We still have certain e-components, chips that we cannot yet get in the quantities that we need. We also have some other components that are not yet reliable for in the market. So we have our orders placed, but we're not exactly sure or confirmed when we get them. So that makes that we have still volatility to manage. At the same time, we're also taking more structural measures to look at our product portfolio. So we are pruning our product portfolio, we're redesigning our products, and also we are reorganizing how we make our supply chain more robust. So we are taking our supply chain from a functionally organized supply chain into a business organized supply chain that really tailors around the segment there serves.
Roy, can we also talk about profitability? What's the outlook then for profitability for full year 2023?
So in the guidance today that we give out, we mentioned that we are going to take up profitability to high single digit in 2023, up from the 7.4% in Q4 that you saw. That came out, also 7.4% for the year that you saw. So we are taking profitability up on the back of getting back to growth in 2023. We guide there on low single digit, and also making sure that we work both on the margin side, increasing prices, extracting more value out of the portfolio that we have, as well as making sure that we contain our cost and manage the inflation well.
I wanted to ask about that because clearly inflation on the input side is a challenge at the moment. Are you managing to pass through most of that additional cost?
So we are able to pass through more cost, not yet in full, because we have an order book that has been placed actually also in part in the past. So people have put in their orders at prices from, for example, a year ago, as in certain product lines, we still have lead times of a year. So there actually you're still combating the old pricing. But the new prices we are able to pull through, and that's also where you see that the improvement in margin is coming in and will help us in due course of 2023 to support us in our margin realization.
And can I ask you about the COVID situation in China specifically? We just had a report, as you will have heard, from Sam out in Singapore talking about the post-COVID reopening of the stock markets and perhaps some belief that the infection numbers may have peaked, although very difficult to say at this stage. What would that mean for you, and how do you foresee the reopening affecting you both positively and perhaps negatively?
Yeah, China is a very important market for us, both from a demand perspective, because it's an attractive market with growth opportunities, which actually have been depressed given recent COVID developments in China. But it's also very important, as you know, for our supply situation. So on both ends, it's really important for us, and therefore it's good news if we see the COVID situation improve. We also know from our own operation and organization that actually we had many of our colleagues going through COVID in recent weeks and months, and also there we see that actually it's improving. So indeed we expect that in due course of 2023 we will see a strengthening of the situation in China, COVID hopefully getting less of an impact, but at the moment we do still see the impact. We see hospitals being overloaded where we can, for example, then not install our equipment. We do also see some consumer demand impact that has had us significantly impact in Q4. We expect some of that in Q1, but we also actually see an uptick, and we expect an uptick in China coming later in the year.